basically Bitcoin, just think of the digital gold story. That's a very nice, collateral, valuable, simple, you can't dilute it. Everybody knows that story. So that's simple. The others, really, they're all smart contract platforms. And what they are technology network. And you as a consumer, let's say you're an institution, have a choice of what you want out of your network. If you want ultimate security, you're going to use Ethereum. If you want fast, cheap, and effective, Solana's been doing great. And if you want fast, even faster, even cheaper, and programmable in new ways, but newer, so it's riskier because you want to make sure that it actually succeeds, then it'll be Sui, which came out of Facebook.
Bitcoin is still the foundation, the world's digital gold. But Ethereum, Solana, and Sui are building the future on top of it. Each one's rising fast, and together they're shaping the next multi-trillion-dollar market. That's the latest message from Real Vision CEO Raoul Pal, who believes this cycle will create the largest wealth expansion in history. Pal sees Bitcoin only strengthening as the base layer of digital value, while Ethereum, Solana, and Sui drive the next wave of growth across decentralized finance and digital infrastructure. This convergence between scarcity, scalability, and innovation will start a new financial era where blockchain networks work together to completely transform how value moves across the world. Make sure to stick around until the end of the video, as Raoul Pal reveals why this could be crypto's biggest breakout yet, and why missing it might be the costliest mistake of your life. Before we jump into it, just a quick reminder. Only a small percentage of you watching are actually subscribed. If you're getting value from the videos, hit that subscribe button. It's free, it supports the channel, and you can always change your mind later. Now, here's Raoul Pal with his latest outlook.
Obviously, these digital assets have been around for quite a long time now, over a decade. And most of the time it was retail participation. And even with stable coins, that was a retail thing. Tether was really, Asian retail be able to send money around the world and South America. And then it became Asian corporates were using it to get around capital controls. So like Malaysia to China, stuff like that, to get around the FX cross rate. So we saw a bit of that. And then this year, as soon as obviously MiCA regulations in Europe came, and then the US just basically opened the door to it all, we've seen an absolute explosion in the space on the institutional side. So we look at the adoption of the space overall, it's been growing. When we kind of rebase it to 5 million active wallet versus, let's say, 5 million IP addresses back in the early 90s for the internet was the fastest adoption of any technology the world has seen. Right now, crypto, since that date, has doubled the speed of the internet adoption. So it's been the fastest adoption of any technology, and it's now been superseded by AI. So what we've seen is massive adoption. We've now got 950 million active wallets. It's projected to get to about 4 billion by 2030. So that's going to be half the world. Now, most people have multiple wallets, so it's not fair. But so we're seeing that. So wallets are becoming more normal. And then we're seeing the institutions building all of the rails. And stablecoins is the killer app for institutions because it's just faster, cheaper, more efficient. So we're seeing everybody from Visa to MasterCard to PayPal to you name it, all using these rails. And we're going to see corporates doing it as well. So multinational corporates can move money around their corporate headquarters. Let's say you're a metals and mining company and you've got operations in Angola, Nigeria, Brazil, right? You need to move dollars around the world to pay staff, do stuff. It's actually hard because a lot of them have capital control. But if you have an internal stable coin, okay, that makes it really fast and efficient. So I think there's a lot coming. So the way I look at it as we're a $4 trillion asset class today. If I compare it to global equities, 200 trillion, global real estate, 300 trillion, global bonds, 250 trillion. So we're nowhere there yet. So if I just look at the trend rate of growth, I think we get to 100 trillion by about 2032. So that means we're only 4% of the way to 100 trillion. And that's still half the value of global equities. Now, what is the value of this thing if all equities, all bonds, and all real estate go on chain? I don't know. It's obviously not the value of the whole thing, but it's still going to be a large value. So all we're saying is we're 4% of the journey there, which makes it what I've said is the greatest macro trade of all time, because you've got this adoption curve of a technology. And unlike the internet, you can actually own a fraction of it via a token. It's amazing.
How do you see DeFi, gaming, real world asset tokenization? You got a guess on what are going to be the big sectors?
I don't, but look, we know that, as we said, asset markets are going to get tokened. There's a lot of people who want to tokenize real estate, but I'm not sure there's buyers of those tokens. All the real estate people want to sell tokens to find more liquidity. We're seeing the asset management industry, people like Apollo and stuff, talking about tokenizing theirs. I think what they're trying to do is find new buyers for private equity. So that kind of, I'm not sure how big that is compared to equities, which is a very efficient way, bonds, money market funds, that kind of stuff. I think that's really efficient. The gaming is a huge market. Billions of people play games, super active, and they exchange assets. And most of those assets, you can't move from one game to another. So you can't have value, because if you lose your login, your value's gone and all of this stuff. So it solves that. Even bigger than all of that is actually the move from Web 2 to Web. And that's stuff like digital identity. Right? That's an 8 billion person TAM.
Yes.
We're all going to need it when it comes to AI, right? Who's a human? Then you have this nice technology like zero knowledge proof. So that means that Drew can verify all his documentation, but he can remain anonymous online, and it can be proven that you've passed all your KYC.
My wallet address is ticked. That's right. A KYC wallet, and
then everybody can accept it. So that we've seen stuff like that being done in India with Aadhaar, and that was a $1.3 billion digital ID. But we're going to see this at scale across the internet, and you'll have multiple digital ID for different purposes. So we've got that. We've got putting of basically any verified information on chain. If you think of an NFT, a non-fungible token, what that really is a contract. So then when you think about it, okay, well, that's probably the insurance market, because there's big value and it's settled on an outcome. We're seeing that with prediction markets, gambling, their big market, but we'll also see it with all ticketing. Basically, every ticket is more efficiently done as an NFT, and you've got other things. You can build social graphs and stuff around it. So
and community tokens, whether it's Taylor Swift or Chelsea Football Club, right?
That's right. And so the scale of this thing is much bigger than people still understand. And so even at $100 trillion, what is the value of the internet today? That's kind of the question we're asking. What is the value of this? It'll be probably one of the most valuable things humanity's ever had, because it is, for the digital age, the global store of value, transaction layer, and kind of contract settlement layer. Now, everything that humans do is basically a contract. Even you and I today was an email, but it was like a written contract. Is hey, I'll turn up today. All the people watching this, it was a contract. Every time you buy something in a shop, every time you use a credit card, they're all contract. And a lot of this can be done much more efficiently via these rails.
There are nearly 1 billion active crypto wallets today, projected to reach 4 billion by 2030. That makes this the fastest adoption curve of any technology in history, expanding twice as quickly as the internet did in its early phase. Pal believes this acceleration marks a major turning point. As blockchain use expands across payments, gaming, finance, and digital identity, it's becoming an essential part of everyday life, rather than just a speculative niche. Let's hear more from Raoul Pal.
Basically, Bitcoin, just think of the digital gold story. That's a very nice, collateral, valuable, simple, you can't dilute it. Everybody knows that story. So that's simple. The others, really, they're all smart contract platforms. And what they are technology network. And you as a consumer, let's say you're an institution, have a choice of what you want out of your network. If you want ultimate security, you're going to use Ethereum. It's been around longest. It's got the most number of nodes on the network. It's got the highest value settled of all. If you want fast, cheap, and effective, Solana's been doing great. And if you want fast, even faster, even cheaper, and programmable in new ways, but newer, so it's riskier because you want to make sure that it actually succeed, then it'll be Sui, which came out of Facebook. So these are like thinking about cloud storage or other big network things that you use. That's what these are. And people confuse it because the word currency comes up in the title. The currency part is basically, think of it as the equity of the network. It's the value of the network. You also need to use that token to have a slot on the network. So you're paying for a space on the network in a native equity token. That's really all it is. And they're just technology. And it's like breaking down component parts of the internet and being able to do that all over again. And so when you build these rails, you've then got things like decentralized storage layer. So right now, if you're an institution, you're probably storing everything that you do. Either you have to have your own massive mainframe, which is expensive and out of date, or you're using AWS or Microsoft Azure. So you've got now all of your private data with some giant corporation who the US government can actually get the information from. Well, maybe there's different ways of doing that to make it more robust to hacking, to make it more robust from state level attack, and that's decentralized databases as well. So there's a lot happening within this space, and those three are basically the pioneers of what are known as layer one, the kind of settlement layer of this new.
So what for the institutional folks, what do you think is the biggest misconception that you see people who are new into the space or people who are not going into the space? What do you think the biggest misconception?
The biggest misconception is what derives the value of a network. There's nothing backing it because they're thinking about currency and they forget that, what's the US dollar backed by? Yeah, guns. There's nothing else, right? So it's guns. What's the Aussie dollar backed by? Guns.
Iron ore.
Iron ore. Yeah, but it's not a true backing, right? So all money is actually a social consensus mechanism. Even gold. We decide gold has a value because
you can't eat it.
Shininess and you can't get rid of it. It doesn't destroy easily. So it's a great asset. So the perception is what is the value of these things? Why is this thing worth $500 billion in the case of Ethereum? And what people need to understand is the value of a network. So a network is like Amazon is a network of goods and services, including cloud storage and a whole bunch of other network of buyers and sellers, and it's huge. It's one of the biggest in the world. What is Google? It's a network for us to exchange, to get involved in whether it's search or social media and other things, and it's also an ad exchange, the largest ad exchange in the world, and a whole bunch of value goes on the network. Facebook, same. All of these things are network business. So these are just networks. They're decentralized networks. And how does a network derive value? This is where a lot of people go down the route of, well, I want to understand the cash flow. And then it doesn't add up. Much like Amazon never added up with cash flows, and Tesla doesn't add up today with cash flows because they're valued as networks. And a network is derived by Metcalfe's. Metcalfe's law is how you value a network, which is the number of people on the network times basically the total value transacted on the network. And so as you have more activity on this network, as people build new things on it, it becomes more and more valuable. The more people come, the more valuable it is. So you can have something that transacts between two people, a real estate deal. That's not a network. It could be $100 million property, goes between one to the other. But now if you've got a network of buyers and sellers on a platform, let's call it Zillow, or you've got one in Australia, which is
realestate.com. Yep.
Realestate.com. Realestate.com, you've got buyers and sellers transacting. Then you've got advertising, lawyers, everybody, right? The value of that is much more than the cash flow. And that's how these things are valued. And these blockchain networks are also super fast growing. They're fast growing because the number of users is going up a lot, twice the speed of the internet, and the value transacted is going. So that's why they accumulate so much value so fast, because of all of the functionality of what you can build on these networks and how fast they're growing. And that's why on a cash flow basis, people don't understand it. They say it's not backed by anything because they think about currency. It's not. It's basically a share of a net and you own it, unlike which we couldn't do in the internet. I actually think now that these are the two fundamental technologies of the internet. We're basically building an internet of intelligence. That is what AI is going to be, and it'll be bigger than that in the end. But that's what we think about. We've suddenly created an intelligent internet. So we went to read and write. Web 3 or crypto was read, write, and own. So you can own your identity or your assets in this world. And now you've got read, write, own, and intelligence, which is scaling faster than all the other things combined. Now, when you're bringing in intelligence at the current level today, we're seeing things like Sora 2 coming out from ChatGPT, from OpenAI, and it's creating cinematic video quality. So, okay, now you don't know what is real and what is not. We can make news clips of Russia nuking Ukraine. How do we know? Where's the verified truth? Oh, that's what blockchain does. Blockchain's job is to solve the Byzantine generals problem, which is how do you have a confirmed source of truth? So that means that if we're going to exist alongside the AI, we need to prove who's who, what's real, what's false. But also, so that's just the foundational layer. That's what we need today, because the internet's going to get swamped with fake stuff, and we need to prove who's human and who's not. But really, when you think about it, what is happening is we're actually, and by no coincidence, we're using the same expression for bits of information that feed the intelligence are called token. And the tokens are also the things we trade. So now think of a token as a package of information that is machine readable. That could be money, it can be storage, it could be ownership, it can be information itself. So now we're going to tokenize this stuff, and this demand from AI is only going to keep accelerating. And so all information is going to start to have value. Right now, it's only using the internet, but there is 50x that size, or 100x, or 1000x, or whatever the number is, million x in private data. So that data are tokens, and can they be tokenized and traded? So are the AI going to bid for tokens that they need? When you've got agent that want to build whatever it is they're doing, and they need a certain type of information, they could go to a marketplace and buy that information to give them the knowledge to complete tasks. So these two things are kind of joined at the hip. There's almost no way of transacting at that scale for that much data in massive exchanges without blockchain technology. So don't forget, once you set an agent onto a task and it's using another agent to do something, both those agents use compute and electricity. So they have a cost. Now, agents are probably going to be profit-making entities as well, so they want to make a margin. So how do they get paid instantaneously at the speed of ChatGPT or whatever AI you're using? I mean, you've seen the speed. It's stupid fast. So you need less than 1 second finality on a settlement and a transfer between agents at preposterous scale, because we can have 100 billion agents all doing this. The only way is going to be crypto rail. But the question is what currency and how? Do they have their own? Do they use the core currency of the network? Do they have US dollars? Do they have, and I think the answer is yes to everything. And we will see. And in the end, it won't be up to us. It'll be the AGI choosing what is the most effective way. Now, it may set up its own blockchain to try and make it faster, cheaper, and more effective for itself. I mean, this is the weird world we're coming into, because within a year, if we look at the IQ, which is a not perfect measure of the intelligence of the latest models, they're about 150.
But that has been phenomenal, because I remember it was less than a year ago when it sort of hit 100, but effectively the IQ of the model was 100 IQ, but they knew about everything, right? So each subject had 100 IQ person or ability to answer. And now you've got a PhD expert in any field able to answer any query in seconds.
And IQ is doubling every year or maybe less. So the next iteration really of all of these models is going to be beyond human intelligence. Okay, so we're now not the apex intelligence on the planet, which we can't get our heads around. But that is what's coming. So when we talk about the AGI making its decisions, it will make better decisions than us generally. And particularly the more powerful it gets, the more it learns, the more it does reinforcement learning from the environment, much like Tesla cars are doing right now, reinforcement learning using visual models. There's no stopping this. The exponentiality, the speed of increase in intelligence is going to be huge. So we're kind of just having to strap in and take the ride to see where this goes.
Investors often misunderstand crypto's value. These assets aren't backed by cash flow, but by network activity, similar to how companies like Amazon, Google, and Facebook derive their worth. The more people and applications using a network, the more valuable it becomes. Following Metcalfe's law, Pal believes this network-driven model explains why blockchain assets grow so fast. They scale with both users and transaction value. In his view, owning tokens is like owning a share of the next generation of the internet. Something investors couldn't do during the first web era. And that brings us to an important question. If this really is the next generation of the internet, one you can actually own a part of, how early do you think we still are? Are you already positioned to benefit from it if you want to stay ahead and know exactly when the market's heating up, or when it's giving you those rare buying windows? I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights so you can make smarter decisions without spending hours buried in charts or headlines. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in. Don't pass up the chance to stay updated and make informed choices in the crypto market. Anyway, guys, I hope you all enjoyed today's video and that it gave you some value. I'll see you all in the next one, and as always, all the best.